Greetings guys, and welcome back. Welcome to my channel. This is Katlawa AC the Sun. I am the head founder of God Mode FX and the head mentor of God Mode FX. Now guys, today we're going to be breaking down and be introducing, this is actually the first episode of Psychology series number 1. So this is actually the first episode that we're going to be having. Now our main goal guys is to grow this channel and to really make it more information based and educational as it can be, by delivering a lot of content when it comes to market structure analysis, when it comes to trade breakdown, because I'll be breaking down some of my trades right here on YouTube. So guys, I hope you're gonna like and subscribe, and please share it with some of your friends. Before we get into the video guys, just prepare yourself to really get into the scene that we actually want to get into and really just see what we're going to be doing, because this video is actually meant and made for both beginners and also those ones that are just in the intermediate phase, and also those ones that are really making profit. It's actually very good sometimes to go back and really check what the basics are in whatever that you're doing. So let's get into the video right now. As I said, this is God Mode Forex episode number 1. Now, what is Forex? Although the meaning and the definition of this term Forex is quite neat and clear, the representation and explanation of it has been nothing short of cluster and chaos. In this small engagement we shall have, I will try to explain this concept in the most simplistic and realistic manner pertaining to the true nature of the Forex markets. This is to ensure a clear gateway from the definition to the application and participation in the Forex industry. Now, to help me with that goal, let us first visit Wikipedia for the definition of Forex. Now, according to Wikipedia, the foreign exchange market is a global, decentralized or over-the-counter market for the trading of currencies. This market determines foreign exchange rates for every currency. It includes all aspects of buying, selling, and exchanging currencies at current or determined prices. Now, as much as I would like to break down that definition word to word, as it carries a lot of depth, I will only be focusing on the few words that are actually in that definition. And those words are: it includes all aspects of buying, selling, and exchanging currencies at current or determined prices. This implies that individuals who participate in the Forex industry are mainly interested in the two major factors, which are time and price. The concept of time, it consists of economic events, for example, inflation rate, FOMC, NFP, rate of employment, and etc. Most importantly, time also consists of market sessions, which are like London session, New York session, so forth, and trends. We also have to realize that time influences the psychology and emotion of traders and investors, but this is to be visited also in the future. The concept of price. Now, on the other hand, price is king. The general rule of economics dictates that buy low and sell high. That is, if you want higher probability for your buy or your sell to be successful and profitable. With this in mind, we have to realize that price also influences the psychology and emotions of traders and investors, also to be revisited in the future. So in conclusion, price is king, but time is the kingdom. Now, there are many terms used in the Forex industry, some to explain the market conditions, actions, tools, and participants. However, in this engagement, I would like to focus on the traders, which are participants. Now we have bulls and bears. So traders are universally divided into two sentiments: buyers, which are called bulls, and sellers, which are called bears. To put this into perspective, for any economic or market transaction to be successful, we need to have both buyers and sellers. If a transaction has to occur at a supermarket, the seller, who is the cashier, has to sell a product to the buyer who is the customer in order to have a successful business transaction. Realize we haven't yet spoken about profits or loss, only transactions. Now, these traders are divided into two compartments and an extra one, which is actually just a combination of the two. Note, the differentiation is based on their choice of analysis tools. The first group, fundamental analysis traders. These traders are focused more on the economic events and news releases concerning the type of asset they are investing in trading, or they're interested in trading. They therefore make their trading decision based on that information from where? From the economic events and factors that have been affecting the market. The second group, technical analysis traders. This type of traders focus more on reading the charts and price patterns behaviors in order to understand the market structure of the asset. They therefore rely on the information they gathered to make their trading decisions. This is the information that they usually gathered from what? From actually looking at the charts and looking at those price patterns and the price action that the market is usually showing them. We have the third group. The third group is called sentimental analysis traders. This group uses both fundamental analysis and technical analysis in order to gather information about the asset, and they rely on both technicals and fundamentals to make their trading decisions. Now, to explain more on the technical or on the sentimental analysis traders, the sentimental analysis traders, they are really using the fundamentals to give them the direction of the market, meaning by looking at the fundamentals they can understand if the market is soon to go up or to go down. Then from there they go to the technical analysis factor to try and understand where they can actually get a perfect or the right price into actually entering into the market, because you know it's always great to buy at the correct price. Like I said, we buy low and we sell high. To the next slide. So those three groups of traders have actually three types of traders within them. Note, these traders are divided according to their risk tolerance and the time they are willing to spend on the market. We have swing traders. These traders like to hold their trades or positions for a long time, normally longer than a week to months. We have intraday traders. Now these traders like to hold their trades for less than a day or two, and then that will be the maximum they usually like to hold their trades. We have scalpers. Now this type of traders like entering normally on a lower time frame, like the 1 minute, and then be out in less than an hour or two. Now all this will be discussed in the next coming episodes, meaning I'll go more into depth about this type of traders. But then in simple explanation, we can say that the swing traders are for those ones who really are busy. You understand? People who are working in 9 to 5 and who just want to invest, who want to trade like investments. So they literally just look at a stock or look at an asset, and then they buy it at their low, and then they can hold it for a long time. And then intraday, they like trading throughout the day, meaning most of the time they prefer that when the day ends, they have closed their profits. And then scalpers just go in for 1 hour or even less than that sometimes. So we'll get to it in the next coming episodes. As you can see, guys, we are at the end of the session. We are at the end of the lesson. What I hope is that you really gained a lot of information and a lot of content from actually getting this. So it's your boy Katlawa is the Sun, and I will be signing out soon. Please, guys, don't forget to like, don't forget to subscribe, and then the more you engage with me, guys, and please share it with your friends. The more you engage with me, guys, I'll actually come and deliver more content to you guys. In explanation to the markets, and really get in depth with the charts. It's your boy Katlawa is the Sun. If you want to get a hold of me and want to talk to me, there will be a link in the description below. Just hit on it and you'll be able to talk to me. It's your boy signing out. Love you guys. Stay blessed.